Hey trader, welcome back to the ComLucro channel. Today we are going to break down a macro study of Bitcoin using the weekly and the daily timeframes. Many of you asked for a clearer view of the broader structure, how price is flowing, and where the major imbalances and reference points are forming. This is not a forecast and not a recommendation. It is simply a structural study to help you understand how the market is moving across the higher timeframes. I marked everything on the chart to make the visual process easier. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. So let's begin with step 1 to analyze the chart. At the far left of the chart, we have the weekly higher low, which marks the beginning of the entire weekly bullish leg. This point is important because it represents the last major low that held before the market started its strong push upward. From this level, Bitcoin created a clear displacement to the upside, leaving behind a weekly fair value gap and forming the structure that leads all the way into the weekly higher high at step 7. As long as this weekly higher low remains unbroken, the broader weekly structure is still technically bullish. If price ever closes below this point, that would signal a major weekly change of character, meaning the larger trend has shifted. So step 1 is the foundational anchor of the weekly trend and the reference point for all future structural analysis on this chart. This point marks the weekly break of structure. Here, price breaks above the previous significant weekly high, confirming that the broader trend is continuing upward. This breakout validates the bullish direction of the weekly chart and shows that buyers are still in control. From this moment forward, every pullback remains a correction inside a weekly bullish environment until a future weekly low is broken. This weekly break of structure also sets the stage for the large move that eventually completes at step 7. Step 3. At this point, price creates a new higher high on the daily chart. This confirms that the daily trend is still moving upward and that buyers are pushing the market into a fresh bullish swing. Step 3 becomes the reference high for the next structural movements because it is the peak of the daily bullish leg before momentum begins to weaken. Step 4. Here, price pulls back and forms a new daily low, but this movement does not break any bearish structure. It is simply a normal retracement inside the ongoing daily uptrend. This low becomes an important reference point because if price breaks below it later, that break would confirm a daily change of character. For now, step 4 is not a bearish signal. It is only the swing low that defines the boundary for a future choke. Step 5. Here price completes a valid daily break of structure. After forming the high at step 3, price retraces deeper than the 38.2% Fibonacci level, which meets your requirement for a confirmed pullback. Then, price pushes upward again and closes above the previous daily high at step 3. Because the retracement meets the Fibonacci depth rule and the candle body closes above the prior high, this movement confirms a true break of structure to the upside on the daily chart. Step 5, therefore, represents the final bullish confirmation before the market begins to show weakness later in the sequence. Step 6. Here price breaks below the most recent daily swing low, the low formed at step 4. This move confirms the first daily change of character to the downside. It's the first clear sign that sellers are stepping into the market and that bullish momentum is weakening. However, this change of character is not confirmed by continuation, because price will soon push upward again. So step 6 marks the first bearish shift in daily structure, but it does not develop into a full bearish trend yet. Step 7. After the daily change of character at step 6, price rallies strongly and breaks above the previous major high. This confirms a new bullish break of structure and creates a weekly higher high and a new daily higher high at the same time. This movement invalidates the earlier bearish attempt and shows that the weekly trend is still dominant. Step 7 completes the entire weekly bullish leg from step 1 to step 7. Step 8. Here price breaks below the daily swing low that formed after the weekly higher high at step 7. This movement creates another daily change of character. It is the second clear warning that sellers are gaining strength. However, This move is not a daily break of structure yet, because the trend needs a valid retracement and a confirmed follow-through before a BOS can be established. So step 8 is an additional alert of bearish pressure, but not the official shift into a bearish trend. Step 9. After the change of character at step 8, price retraces upward and pulls back deeper than the 38.2% Fibonacci level. This confirms a valid pullback inside the new bearish intention. Step 9 establishes the lower high that the market will later use to confirm the first break of structure to the downside. It prepares the structure, but does not complete the trend reversal by itself. Step 10. Here price breaks below the daily swing low that was established before the retracement at step 9. This confirms the first true daily break of structure to the downside. Now the daily trend becomes officially bearish. Sellers have full confirmation, and from this point on, the sequence of lower highs and lower lows begins to form, clearly. Step 11. After confirming the daily break of structure at step 10, price retraces upward again. This pullback moves deeper than the 38.2% Fibonacci level, validating a new lower high inside the bearish trend. This point is also used as a structural reference. If price ever breaks above step 11 in the future, that would signal a potential daily change of character, back to the upside. Step 12. Price moves down again and breaks below the swing low formed after the retracement at step 11. This confirms another daily break of structure to the downside. The daily bearish trend continues cleanly. At the same time, price is now trading inside the weekly fair value gap left behind by the bullish weekly leg from step 1 to step 7. This zone is inside the weekly discount region and sits close to the weekly order block. Even though the daily trend is clearly bearish, the weekly structure has not confirmed a bearish break of structure yet, meaning the market is still technically inside a weekly pullback while printing bearish continuation on the daily. To wrap it up, Bitcoin is showing a clean bearish structure on the daily time frame, while the weekly chart is still inside a deeper pullback within a discount zone. Even with this short-term weakness, the broader weekly structure remains bullish because the main higher low has not been broken. What we are seeing now is a strong retracement that has already moved beyond the 61.8% level and is entering the last weekly order block left behind. This zone is important, but it also demands caution. Price can form a false weekly change of character, sweep liquidity below key levels, and then resume the larger bullish trend. So as Bitcoin moves inside the weekly fair value gap and approaches the order block, stay aware of the possibility of deeper liquidity hunts before any major continuation. If you enjoy this type of structural study and want more breakdowns of the weekly and daily movements, drop your thoughts in the comments. Tell me what you saw on the chart, which time frames you want to see next, and whether this format should become a recurring series here on the channel. And if you want more videos like this, like the video and let me know below so we can keep bringing deeper technical studies for you. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro Trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.